I do see it happening. It's taken over number two spot in global reserves, surpassing the treasury. Passing the euro just recently. It's now number two globally in reserves. It's interesting. Goldman Sachs came out with a report that I've been talking about for 2 years through various sources. But now they come out and say, yeah, the central banks are buying way more than they're telling us. China's buying at least 10 times more than they're telling us. I've been saying that for 20 years because the numbers that China always talked about never went up, ever. For year over year over year, they stayed the same. But they're the largest producer in the world. And so you're seeing an environment where, the acquisition by the biggest money in the world continues unabated. And I think what would happen would be that the price would go high enough that it would keep the public out at some point. I think they'll continue to let it go higher and higher and higher. I think it will back a new system. I really, truly do. I think it's being quietly reintegrated into the monetary system. And you can see it around the globe through all the deliveries. You can see it here in the United States as we become a net importer and the massive month over month over month over month massive deliveries into COMEX. So yeah, I think this is happening. I think gold is quietly being reintegrated into the system, and I think it'll go higher than anyone thinks possible. I really do. As markets typically do. And Rick Rule, who I know you've had on your show, and he's done more for me than anyone in the world, and I just did an interview with him the other day, and he said it to me again, Andy, the allocation of gold and gold-related equities, not just gold, but gold-related equities too, across the entire financial matrix from Joe and Jane six-pack to the Harvard Endowment Fund is less than 0.5%. We added 14,000 clients in 45 days when Silicon and Signature Banks failed in 2023. That's 4 years worth of client acquisition. And of course, they bailed out the banks illegally and that went away, even though they're not supposed to do that. Ask the folks in Lindsay, Oklahoma about that. They experienced a first bank bail-in October of last year. But anyways, I digress. The point of it is that at that super high level that we see right now, at the really, really high level, the central banks, the commercial banks, what are they all doing? Not only are they all buying, but the common denominator that I think isn't talked about enough is the repatriation and the deliveries. 40 plus central banks have repatriated their gold from the Bank of England and the New York Fed. Why? Those are the two depots that gave access to the COMEX and the LBMA. Instant liquidity, safe jurisdiction, stable. No, we don't care anymore. We'd rather be a little more inconvenienced and have it in our own possession. All of a sudden, seeing the largest deliveries ever off the history of the COMEX. No, that's okay. We're not going to take paper futures anymore. We're not going to leave it in the ecosystem. We'd like to have it. Thank you very much. Where do the coins come from that the people that at our level buy them? Where do we get them from? Well, they get them from the mints. Where do the mints get the gold from? Most of it from the COMEX and the LBMA. What's happening to the COMEX and the LBMA? It's being bled dry. And we, the people who are listening to this show who will buy the gold and silver, represent the pimple on the elephant's rear end. The elephant has no idea about any of this yet.
All right, folks, gather around, because what we're living through right now is one of those rare moments in history where the writing is on the wall for anyone willing to look. But I'll warn you, most people don't want to look. It's easier to keep scrolling TikTok and pretend everything's fine. Meanwhile, under the surface, there is a tectonic shift underway in the global monetary system that will blindside the average investor. Let's start with something that should absolutely blow your mind, and that almost nobody is talking about. We are watching in real time gold being quietly reintegrated into the global financial system. I've been doing this for over 3 decades, and I've never seen anything like what's happening right now. And guess what? Most people are completely oblivious. Just look at the numbers. Gold is up about 35% year to date, absolutely crushing the US Treasury market, which is down for the 3rd year in a row, the worst performance for bonds in American history. Meanwhile, silver's up over 45% year to date, outpacing everything else in the metals complex. And yet, when you turn on the mainstream financial media, what do they tell you to buy? Tech stocks, meme coins, AI hype plays that have never turned a profit. It's clown world economics. Meanwhile, the biggest money in the world, the real insiders, are backing up the truck. Central banks around the world added over 1,100 tons of gold to their reserves in 2023 alone, the most in modern history. And they're on pace to break that record again this year. China is buying at least 10 times more gold than they publicly declare, according to a recent report by Goldman Sachs. And let me tell you, I've been saying that for 20 years. Because the numbers never made sense. China was the largest producer and importer of gold in the world, yet their reserves didn't move for nearly a decade. You think that's an accident? Of course not. They've been stockpiling under the radar. And what about here in the US? Well, we've quietly become a net importer of gold for the first time in decades. And nobody seems to know who's doing all this buying. The deliveries into the COMEX since November have been off the charts, month after month smashing records. The May gold and silver contracts were the largest physical deliveries in the history of the COMEX. That is not normal. Normally, 99% of these futures contracts settle in cash. Now suddenly, the biggest, most well-informed and best-funded money in the world is saying, yeah, we'll take delivery, thank you very much. That's your first major clue that something's changing. Now let's talk about the elephant in the room. The de-dollarization trend that everyone in Washington is pretending doesn't exist. You've got over 40 countries actively working to settle trade outside of the dollar. The BRICS are building their own systems. Saudi Arabia is taking yuan for oil. Even France, our old buddy, settled a liquefied natural gas trade with China in yuan. That is a historic first. And just to spice things up, the yuan recently surpassed the euro to become the second most held reserve currency in the world, right behind the dollar. This is huge. It means countries are deliberately diversifying away from the US dollar. The dollar's share of global reserves is now under 59%, down from 73% just 2 decades ago. That's a long, steady bleed, and it's accelerating. Why? Because the rest of the world sees what we refuse to see. Our monetary and fiscal policy is completely reckless. We're running $2 trillion deficits in what's supposedly a strong economy. Our total debt just crossed $34 trillion and is growing by $1 trillion every 100 days. Meanwhile, the Fed is pretending it can somehow normalize rates without blowing up the entire bond market. Spoiler alert, they can't. Even the Treasury market is flashing major warning signs. The long end of the curve is broken. Earlier this year, we had a sharp rally in bonds. Everyone thought, great, yields will finally come down. And then, bam. Within 48 hours, all those gains evaporated. That is not how a healthy market behaves. That's a sign of deep structural problems. And the Fed knows it. That's why, despite all their tough talk about QT, they're quietly buying billions in long-term treasuries behind the scenes. They don't have a choice. If they don't step in, yields explode, the debt service costs blow out, and the whole house of cards collapses. Now let me connect the dots for you. When you see central banks buying record amounts of gold and taking delivery, not paper contracts, that's the ultimate insider trade. They are the very institutions that manage the fiat system. If they're hedging with gold, that's like the CEO of a company dumping his own stock. They know what's coming.
The people like you and I do. But what I'm getting at is that you can see at the high level, they're already pre-positioning themselves. And by the time it becomes something that is observable rather than doing the research and being early and doing things when they're not in favor or not considered conventional, those are the people who are sitting prepared. But everyone else who acts just in time after it becomes visible by their eyes, you bet 100% there will be no gold and silver available. They'll buy ETFs or they'll buy whatever they can. But the physical market, which is flush with product right now, just like that, can change. If you realize that there's 6 major mints on the globe, that's about it. A handful of refineries and mints, but you got the US, Canada, Austria, Australia, South Africa, and the United Kingdom. At some point, if things got that crazy, don't you think these mints would stop sending their gold across the globe to the United States so that we can buy it and maybe they'll take care of their own people? I'm saying yes. I have said forever in my belief, and it always comes across like, yeah, right, he's talking his book, but I'm not. This market will be defined by an inability to source product before the music stops, because it will be. There's such a small percentage of people in it right now. When that number, if it just got to 10% of people's assets, that would be right now a 20-fold increase in demand. It would be over in 48 hours.
Well,
so
that would be scary
5%,
for those.
yeah.
That would be scary for those who are left out who didn't buy the fire insurance before the fire.
That's exactly right. And, it's something that it's very hard to convey with it coming across genuine. I try so hard to be honest about this that I've seen throughout my whole career periods of time where the mints shut down and the product is just gone. And I'll say one other thing. One thing that people don't take into account, the reason that they say there's no bull market like a gold bull market, Gary, is because every other bull market, like in anything, stocks or crypto or whatever, you make a bunch of money and you're told to pull some of that money off and go buy yourself a new Ferrari or reinvest or do whatever you want to do. But with gold, when the price is going higher and higher and higher in this environment in particular, it only reinforces the mentality you employed to buy it to begin with. And fear is a far greater motivator than anything. And I'm not going back into dollars. I don't care. I don't need a new car. I'm going to protect myself and my family. This is why I did this. In other words, the secondary market completely disappears. No one is selling. So when the mints are gone, that's it. And that's something to keep in mind as well. This will be something that happens very quickly where all of a sudden it's very flush and then boom, there's an awakening. And very quickly, the industry, which is a just-in-time industry, just like everyone else, when they run out of product, getting it from across the globe may be next to impossible. So yeah, it will happen.
Now here's where it starts getting a little uncomfortable for the average investor. Because the truth is, most people are asleep at the wheel. I mean, look, you go walk down Main Street right now, ask 100 people what percentage of global reserves are in dollars, or how many countries have recently repatriated gold from New York and London. You're going to get a bunch of blank stares. Maybe one guy in a Bitcoin hat mutters something about sound money, bro, but otherwise, crickets. Meanwhile, the real insiders are preparing like never before. And the numbers are staggering. For example, the dollar is still the dominant reserve currency, but it's slipping. In fact, according to the IMF's own data, the dollar's share of global reserves is down from around 73% in 2001 to about 58% today, the lowest level in decades. And recently, the yuan surpassed the euro to become the second most held reserve currency on the planet. That's no small feat. We're watching the slow motion dethroning of the dollar happen right before our eyes. And yet, you still have talking heads on CNBC saying there is no alternative. Well, yeah, there was no alternative until a bunch of countries got together and decided to build one. The BRICS nations are pushing ahead with their commodity settlement mechanisms. China and Russia are clearing trade outside of SWIFT. The Saudis are taking yuan for oil. All stuff that would have been laughed off as conspiracy theory 10 years ago. Now you've got Goldman Sachs finally waking up, putting out reports that China is buying at least 10 times more gold than they publicly declare. Congratulations, guys. Welcome to the party. We've been talking about that for 20 years. Because if you actually followed the math, it never made sense that China, the world's largest gold producer, biggest importer, with citizens vacuuming up metal every month, somehow had reserves stuck at the same number for nearly a decade. Give me a break. Gold is quietly being reintegrated into the monetary system. That's the story nobody wants to print on the front page yet, but it's happening. You see it in the record deliveries off the COMEX, the massive month-over-month imports into the US, which has weirdly become a net importer again. And you see it in the central bank balance sheets. And let me tell you how this likely plays out. They're going to let gold float higher and higher and higher until the average person is priced out. That's how you keep the public out. If gold is at $5,000 or $7,500 or $10,000 an ounce, most folks simply can't afford to convert meaningful amounts of their net worth anymore. Meanwhile, the big players, the sovereign wealth funds, the central banks, the family offices, they'll have already locked in their insurance. I honestly think gold is destined to back a new system. Maybe not with some overt Bretton Woods-style announcement. Maybe it happens organically, through settlements, through trust, through bilateral contracts. But either way, gold is being reincorporated into global finance. And it'll go higher than anybody thinks is possible. Because that's what markets do. They overshoot. They blow past rational expectations. You know Rick Rule, one of the smartest guys I know. He's been a mentor to me for years. We just did another interview the other day. And Rick pointed out something so simple it's shocking. Across the entire financial matrix, from your neighbor Joe and Jane with their 401k, all the way up to the Harvard Endowment Fund, the allocation to gold and gold-related equities is still less than half of 1%. Think about that for a second. The financial world is leveraged up on every possible asset: tech stocks, real estate, corporate bonds, private equity, venture capital, cryptocurrencies, you name it. And yet gold, the ultimate store of value, the ultimate hedge against systemic risk, is less than 0.5% of global assets. Now imagine that even ticks up to 2% or 3%. That's not crazy. That's not the world going Mad Max. That's just people getting a tiny bit more cautious. You're talking about a 5 to 6-fold increase in demand instantly. And that's where this market gets explosive. You want proof? Look at what happened in early 2023 when Silicon Valley Bank and Signature Bank went under. In 45 days, we added 14,000 new clients. That's 4 years worth of new clients in a month and a half. People were terrified. They wanted real money. Now multiply that by 50 if we get a sovereign debt crisis, or a collapse in the treasury market, or an inflationary spiral nobody can stop. And let's be blunt, the central banks and commercial banks aren't just buying gold, they're repatriating it. Over 40 central banks have pulled their gold back from the New York Fed and the Bank of England. These were supposed to be the safest vaults on earth, right? Instant liquidity, stable jurisdiction. But the central banks are saying, nah, we'll take it home, thanks. They're choosing the inconvenience of holding it themselves over the supposed benefits of having it in New York or London. That tells you everything. Meanwhile, the COMEX and LBMA are being drained. That's where the mints source their metal. The US Mint, the Royal Canadian Mint, the Perth Mint, the Austrian Mint, the South African Mint, the British Royal Mint. There's only about half a dozen major mints globally. They all rely on these exchanges for raw metal. As the big money drains the exchanges and stands for delivery, it tightens the screws on the supply chain. And here's something nobody talks about. The people watching this right now, the retail stackers, the guys buying a tube of Eagles or a few kilos of silver, they're basically the pimple on the elephant's rear end. The market doesn't even know we exist yet. All this heavy movement is happening at the institutional level. When the mainstream financial world finally wakes up and tries to move 5% of their assets into precious metals, good luck finding product. That's when you'll see the mints stop exporting to foreign dealers. Think Canada's going to keep shipping maple leaves to the US if there's panic at home? Think the Perth Mint is going to keep loading up pallets for American wholesalers when Aussie pension funds are screaming for supply? No way. They'll shut the doors to exports overnight to protect their own citizens. And this is where gold and silver are different from stocks or crypto. In a bull market for tech, you make a bunch of money, you're told to take profits and buy a Ferrari. But in a gold bull market, it's the opposite. As the price rises, the very psychology that made you buy gold in the first place, fear of financial collapse, distrust of governments, systemic risk, gets reinforced. You're less likely to sell. The secondary market evaporates. We've seen it before. Mints shut down, premiums spike, products disappear for weeks or months at a time. In the next phase, that's going to be permanent. Because once the institutional herd moves, it's over. It would only take gold going from 0.5% to 5% of global financial assets to absolutely blow this market sky high. That's roughly a 20-fold increase in demand. And it would be done in 48 hours. People think I'm exaggerating. I'm not. This is a just-in-time industry. The gold and silver market runs lean. Nobody carries months of excess stock. So when that wave hits, it's over. The music stops. The average person who waits until it's obvious will be left scrambling for scraps, probably buying overpriced ETFs or digital promises instead of physical metal. And that's why I keep saying, buy the fire insurance before your house is on fire. It's cheap right now. It's available. But that window can slam shut overnight. I want to circle back to something because it's important. Look at what central banks are doing. They are the ultimate insiders of the fiat monetary system. If they're buying gold hand over fist, even repatriating it to their own vaults, that's like the CEO of a company dumping his own stock. It's inside information on the entire fiat model. It's the clearest tell you'll ever get. The central bankers themselves are preparing for a future where trust in fiat collapses. They're quietly moving to backstop their reserves with gold. Meanwhile, retail is chasing dog coins and AI meme stocks. It's lunacy. And let's not kid ourselves. The inflation we've seen so far is nothing. The CPI is a joke. It's the CP lie from the BS department. Bureau of Statistics, Bureau of Spin, take your pick. Strip out their hedonic adjustments and seasonal smoothing, and your groceries are up 25%. Your insurance is up 40%. Your rent is through the roof. John Williams at Shadow Stats has been saying for years, real inflation is closer to 10 to 12%. That's why your wallet feels lighter every month, even if the government swears inflation's coming down. And here's where it all comes to a head. If the Fed pivots to cut rates to save the stock market, and they will, you're going to see the dollar tank. That's when gold really takes off. Because gold has been ripping higher, even with the dollar relatively strong on forex markets. Imagine what happens when the dollar finally starts sliding. And what about silver? Silver is the most under-owned monetary asset on the planet. It's still well below its 2020 highs, while gold is 50% above its own. That divergence is unprecedented. Normally, silver outpaces gold in bull markets. When silver finally plays catch-up, it's going to be explosive. I'll tell you this straight. Silver at $35 to $37 is a gift. When it breaks above that, there's very little historical resistance to stop it from ripping to $50 and beyond. And in a true monetary crisis, silver will overshoot like it always does. So look, whether it's political instability, a sovereign debt meltdown, a commercial real estate implosion, or just the regular old business cycle finally coming home to roost after decades of central bank doping, the path forward is clear. More money printing, more bailouts, more erosion of purchasing power. And in that world, gold and silver aren't just smart. They're essential. They're your seatbelt in a 200-mile-an-hour financial race car that's about to hit a wall. So don't wait until CNBC starts breathlessly telling you to buy gold. Don't wait for your neighbor to start bragging about his monster box. By then, it's too late. Get your insurance now. Sleep well at night. And remember, the insiders are already doing it.